Most beginners who enter trading have one thing in common. They think the hardest part is learning the charts. But the truth, charts are the easiest part. The real danger, the real reason beginners burn their accounts so fast, is hidden in the things they don't expect. Every new trader comes in with hope, excitement, and the dream of making money fast. They're fueled by YouTube wins, social media screenshots, and stories of traders flipping small accounts into something big. But what nobody tells them is that trading punishes excitement. It punishes impatience. It punishes emotional decisions. And for beginners, that's exactly where everything starts to fall apart. They overtrade because the market feels like an opportunity factory. They chase moves because they don't want to miss out. They add positions because they want to recover losses instantly. They increase lot size because one win feels like they're finally getting it. But one bad trade, just one, can erase hours of progress, days of effort, or their entire account. And it happens not because they're bad traders, but because they never learned the mindset behind survival. They think trading is about predicting price, when in reality, it's about protecting capital. They think confidence comes from winning, when real confidence comes from discipline. They think trading is about freedom, but they ignore the rules required to earn that freedom. Most beginners don't fail because they don't understand the market. They fail because they don't understand themselves. They don't see how fear controls their entries, how greed pushes them past their limits, how revenge trading destroys their plan, how impatience shortcuts their discipline, how lack of risk management turns every small mistake into a disaster. And the most brutal part, almost every trader burns an account, not because they're unlucky, but because trading exposes every weakness they didn't know they had. But here's the truth that beginners never hear. Burning an account isn't the end. It's a message. It's the market saying, you're not ready yet. Because the moment a trader learns to control what happens inside their mind, the market becomes a completely different place. 1. They expect trading to be easy. The first and biggest reason beginners quit is simple. They walk into trading with the wrong expectations. They see profits everywhere on social media. They hear stories of traders making money from their phone, working from home, living a lifestyle that looks effortless. So naturally, they think trading is supposed to be easy. But the market is not a shortcut. It's a skill, a craft, a psychological battlefield. Most beginners don't quit because trading is too hard. They quit because the gap between their expectations and reality is too big. They imagine progress that felt smooth, results that came quickly, and a learning curve that wasn't painful. So the moment they experience a drawdown, or a losing streak, or a month with no improvement, they think something is wrong. But nothing is wrong. This is trading. The problem is that their mindset wasn't ready for the truth. Trading forces you to become a beginner again. It humbles you instantly. It strips away the idea that you can rely on luck or emotions. And it reminds you that every step forward costs time, effort, and consistency. The market doesn't care about your dreams. It doesn't care about your goals. It doesn't care how badly you want to escape your situation. It only rewards skill. But beginners don't know that. They think trading works like school. You study a little, copy a strategy, and expect good results. They think trading works like a job. You put in hours and get paid. They think trading works like a game. You learn a few tricks and you win. So when the reality hits, when they see losses, confusion, and inconsistency, they panic. Not because the path is impossible, but because no one ever told them that this is normal. No one told them that the beginning of trading feels like chaos. No one told them that the early phase is supposed to be messy, emotional, and uncomfortable. And here's the truth most beginners don't realize. If trading were easy, everyone would be profitable. If trading were easy, there would be no opportunity. If trading were easy, the market wouldn't pay you for learning it. Beginners quit because they expect trading to be simple. They stay losing because they don't treat it like a profession. But those who survive, they're the ones who accept the difficulty, embrace the challenge, and choose to grow instead of walking away. 2. They chase quick money instead of building skill. The second reason beginners quit trading because they enter this game with the wrong fuel. They want fast money, not mastery. And when your goal is speed, every setback feels like failure. Every loss feels like the end. Every slow improvement feels unacceptable. Most beginners don't study the market because they want to understand it. They study it because they want to withdraw fast. They're not focused on building patience, discipline, emotional control, or risk management. Instead, they're focused on doubling accounts, catching big moves, flipping capital, and proving something to themselves or to others. And this mindset is the fastest way to burn out, because the market does not reward desperation, it punishes it. When beginners chase quick money, they naturally start taking oversized risks. They overtrade, they enter impulsive setups, they jump into trades they haven't analyzed, they break their rules because this might be the big one. They increase lot sizes, not because the setup is good, but because the temptation of a fast win is louder than logic. And for a moment, they might get lucky. A few wins, a small account doubled, a sudden profit that feels like confirmation that they're on the right path. But luck is a trap. It trains the wrong habits. It convinces beginners that they're better than they really are. And eventually, the same market that gave them fast money will take it back twice as fast. When the losses hit, and they always do, the beginner panics. They feel betrayed. They feel unlucky. They feel like the market suddenly changed. But nothing changed. Only their expectations did. They wanted trading to be a shortcut, but the market forced them to face the truth. There is no shortcut. Skill takes time. Patience takes time. Learning takes time. And without these foundations, every win is temporary, and every loss feels personal. This is why beginners quit. Not because trading is impossible, but because chasing quick money creates emotional exhaustion. It creates unrealistic pressure. It creates a cycle of hope and disappointment that destroys confidence. But the traders who survive, they shift their focus. They stop chasing profits and start chasing progress. They invest in skill instead of speed. They build a foundation that will outlast every losing streak. Because in trading, money is a product of mastery, never the starting point. 3. They can't handle losing because they take every loss personally. Another major reason beginners quit trading is because they don't know how to lose. Not just financially, but emotionally. They take every red trade as a reflection of their worth. They think a loss means they're not smart enough, not talented enough, not meant for trading. But losses are not personal. They're part of the game. The problem is this: outside of trading, most people avoid failure. In school, mistakes are punished. In work, errors can get you fired. In daily life, people are afraid of being wrong. So naturally, when beginners step into the market and see their decision lose money, their identity collapses. They feel attacked. They feel embarrassed. They feel like the market is judging them. This emotional weight makes every loss feel heavier than it truly is. They start asking the wrong questions. Why is this happening to me? Why does the market hate my entries? Why am I always wrong? Why can't I be like those profitable traders? But the market doesn't care who you are. It's not trying to hurt you. It's not watching you. It's not targeting you. It's simply moving. And sometimes, even good trades lose. Even perfect setups fail. Even experienced traders take hits. What separates winners from beginners is not that winners avoid losses. It's that they handle them differently. Beginners feel attacked. Winners feel nothing. Beginners panic. Winners accept. Beginners quit. Winners adjust. When a beginner sees a loss, they think, I messed up. I'm bad at trading. This will never work. When a professional sees a loss, they think, that was a cost of doing business. That setup didn't play out next. This is normal. This difference in perspective decides who survives. Because when losses feel personal, the emotional damage becomes too heavy. The trader hesitates, overthinks, fears entering the next trade, then revenge trades to correct the mistake, then blows up an account, then quits, all because they believed a simple truth: if I lose, I'm failing. But in trading, losing is not failing. Losing without learning is failing. Losing with no risk management is failing. Losing because of emotional decisions is failing. But a controlled loss, planned, managed, expected, is just a step. Beginners quit because they don't know this. They never learned how to detach their ego from their execution. They never learned that every trader, even the best ones, lose every single week. The ones who stay, they stop attaching their identity to their results. They stop reacting and start analyzing. They stop taking losses personally and start taking them professionally. Because trading does not require perfection, just emotional maturity. 4. They don't have a plan. They just trade whatever they feel. Another reason beginners quit trading is because they never build structure. They trade based on vibes, emotions, and impulses, instead of having a clear, repeatable plan. And trading without a plan is like sailing without a map. You're not learning, you're drifting. Most beginners don't quit because the strategy failed. They quit because they never truly had one. They jump into the market every day reacting to candles, chasing moves, entering because the chart looks good, exiting because it feels risky. They watch price run away and suddenly they feel FOMO. They see red candles and suddenly feel fear. They see a breakout and suddenly they think it's the start of a big trend. Their decisions come from emotion, not logic, from instinct, not preparation, from pressure, not discipline. And eventually, this chaos becomes exhausting, because without a plan, every trade becomes stressful, every loss feels confusing, every win feels accidental. The trader can't explain why they entered, why they exited, or what they were expecting in the first place. So they never learn anything. They repeat the same mistakes. They get stuck in loops that destroy confidence. The problem is that beginners mistake activity for growth. They think the more they trade, the faster they improve. But in reality, the more they trade without a plan, the deeper they sink. A plan gives clarity. It removes randomness. It tells you what to do when emotions get loud. But beginners avoid planning because planning requires responsibility. When you follow a plan and lose, you have to face the truth. When you trade based on emotion, you can always blame the market. A trading plan doesn't have to be complicated. It simply answers, what will you trade? When will you trade? What conditions need to appear for you to enter? Where will you exit if you're wrong? Where will you take profits? How much will you risk per trade? Without these answers, beginners are not traders. They're gamblers with charts. They quit not because trading is impossible, but because randomness is mentally draining. When every decision feels like a guess, confidence disappears. When every day feels unpredictable, consistency becomes impossible. And when a trader feels lost for too long, quitting feels easier than rebuilding. But the traders who survive, they stop treating trading like a lottery and start treating it like a process. They don't rely on emotion. They rely on structure. They don't hope for success. They prepare for it. They don't guess. They execute. Because a plan doesn't guarantee profits, but it guarantees growth. 5. They don't respect risk. They only respect profit. One of the most dangerous reasons beginners quit trading is because they enter the market with a one-sided mindset. They think only about how much they can make, not how much they can lose. And in trading, this imbalance is fatal. Beginners love profits. They love imagining big wins. They love seeing screenshots, payout posts, and trading success stories. But when it comes to risk, they ignore it, underestimate it, or pretend it doesn't apply to them. This is the mindset that destroys accounts. A beginner sees a setup and immediately thinks, how much can I make? But a real trader sees the same setup and asks, how much can I lose? And is that loss acceptable? The difference between these two questions is the difference between survival and burnout. Beginners quit because they treat risk management as an optional feature, not the foundation. They increase lot sizes when they're emotional. They hold losing trades because it might reverse. They move stop losses because they don't want to lose yet. They risk half their account on a single trade because the setup feels too good to miss. But here's the truth. The market forces everyone to learn eventually. You don't blow accounts because of one bad trade. You blow accounts because you risk too much on that trade. You don't quit because the market is unfair. You quit because you didn't defend yourself. You don't fail because you're not skilled. You fail because you weren't protected while learning. The market is unforgiving, but it is not the enemy. The lack of risk management is. Most beginners burn out because of the psychological damage that comes from reckless losses. Losing a small, controlled amount doesn't hurt. Losing more than you're comfortable with destroys trust in the process, in the plan, and in yourself. A trader who risks 1% can survive 100 losses. A trader who risks 50% can survive 2. And after a devastating loss, beginners experience a mental collapse. They panic. They withdraw emotionally. They lose faith in their strategy. They revenge trade. They dig the hole deeper. Eventually they give up, not because they can't trade, but because they never protected themselves long enough to learn. The traders who survive, they treat risk like oxygen, silent but essential. They respect small losses. They risk the same amount every trade. They accept that their job is not to avoid losing, but to avoid losing big. Because in trading, you don't blow up from being wrong. You blow up from refusing to be wrong early. 6. They trade alone and have no guidance. Another powerful reason beginners quit trading is because they try to do everything alone. No guidance, no mentor, no community, no one to correct them, support them, or show them what to avoid. They enter the most psychologically brutal profession in the world, with zero support system. And when you face the market alone, every problem feels bigger than it really is. When a beginner struggles, there's no one to tell them, this is normal. No, you're not failing. Yes, every trader went through this stage. No, this isn't a sign to quit. Without guidance, every setback becomes personal. Every loss becomes a crisis. Every challenge feels like something only they are experiencing. They assume they are the only ones who feel confused, emotional, frustrated, inconsistent, or stuck. But in reality, every profitable trader has walked through the exact same fire. Trading alone creates an echo chamber inside your mind. You start overthinking your decisions. You doubt your strategy. You question your progress. You lose confidence after every small mistake. You begin to believe that maybe trading is not for you. The worst part, beginners don't know what they don't know. They don't realize they're repeating avoidable mistakes. They don't realize their mindset is the real enemy, not the chart. They don't realize they're mixing strategies unconsciously. They don't realize their emotional habits are sabotaging them. They don't realize they're trading patterns incorrectly. They don't realize they're managing risk the wrong way. Without guidance, they wander in circles. They try a strategy for 1 week. It loses. They switch to another strategy. It loses. They copy someone else's settings. It loses. They follow a random signal. It loses. This endless cycle creates exhaustion, confusion, and hopelessness. And eventually, they quit. Not because trading wasn't for them, but because nobody ever guided them through the messy stage every trader must pass. The traders who survive have something beginners don't. Someone to tell them when they're making emotional mistakes. Someone to explain the difference between noise and signal. Someone to simplify complex concepts. Someone to remind them that the brutal phase is temporary. Someone to help them build structure. Someone to keep them grounded during losing streaks. Guidance doesn't remove the difficulty. It removes the loneliness. And in trading, loneliness is dangerous. It amplifies fear. It magnifies doubt. It increases the chances of quitting. But when you have direction, even simple direction, the noise becomes clearer. The path becomes manageable. The setbacks become lessons, not reasons to give up. Because nobody becomes consistent alone, and the ones who try usually disappear. 7. They have no patience for the invisible progress stage. One of the biggest reasons beginners quit trading is because they don't understand the most important part of the journey, the invisible progress stage. This is the period where you're improving, but you can't see it yet. You're learning, but there's no proof. You're getting better, but your results don't show it. And this phase destroys beginners. Because in trading, progress is delayed. You learn something today, but you won't see the benefit for weeks or months. You build discipline this month, but the results show up later. You understand risk management intellectually, but it only becomes natural with repetition. Beginners hate this stage. They want instant validation. They want quick confirmation. They want proof they're on the right path now. So when they put in effort and nothing changes immediately, they assume something is wrong. Why am I still inconsistent? Why am I still losing? Why do I still overtrade? Why am I not profitable yet? Because progress doesn't work on your schedule. It works on the markets. The invisible progress stage is subtle. You begin to hesitate less. You start recognizing patterns more clearly. You lose more slowly. You stop blowing accounts. Your bad habits slightly weaken. Your emotional responses become calmer. These are all massive improvements, but beginners overlook them because they're not financial results. They want profits, not personal growth. They want withdrawals, not psychological evolution. They want the finish line, not the foundation. And that's why most quit, because they mistake slow progress for no progress. But trading is like learning a language. At first you understand nothing, then you understand a little, then suddenly, one day, everything makes sense. But that breakthrough moment doesn't come out of nowhere. It's built from weeks of invisible learning, small steps, tiny adjustments, quiet improvements. Beginners expect linear progress. Professionals know progress is messy, slow, and often invisible. This mindset alone determines who survives. The ones who quit believe, if I'm not profitable yet, something is wrong. The ones who succeed believe, if I'm improving internally, profit will follow. This is why consistency is rare, not because it's impossible, but because very few people can stay committed when the results aren't showing yet. Real traders endure the boring stage. They push through uncertainty. They stay disciplined even when nobody sees their effort. They continue refining even when the chart doesn't reward them. They trust the process long enough for the market to eventually confirm it. Because trading doesn't pay you immediately for your growth, it pays you later, but it pays you well. 8. They burn out because they treat trading like a race, not a lifetime skill. The final reason beginners quit trading is because they move too fast. They treat trading like a sprint, a race to profitability, a rush to results, a countdown to escape their current life. But trading is not a race, it's a lifetime skill. And when you rush a lifetime skill, burnout becomes unavoidable. Beginners put all their energy into the first few months. They study intensely. They trade every day. They watch every candle. They consume countless videos. They jump from strategy to strategy. They force themselves to improve at a speed that isn't realistic. At first, this feels productive. They feel motivated. They feel hungry. They feel unstoppable. But this intensity is not sustainable. Eventually, the pressure builds. The losses accumulate. The confusion grows. The emotional fatigue hits harder each week. Trading becomes exhausting instead of exciting, a burden instead of a journey, a source of anxiety instead of growth. And slowly, the beginner stops showing up, not because they can't do it, but because they burned through all their mental energy too quickly. The truth is, consistency comes from stability, not intensity. Beginners fail because they want everything fast. Fast profits, fast progress, fast mastery, fast confidence. But nothing in trading happens fast. The only things that happen fast are mistakes. And when beginners treat trading like a race, they make decisions based on time pressure. I should be profitable by now. I should have results already. I'm behind other traders. I need to catch up. This mindset creates unrealistic deadlines, unnecessary stress, and emotional collapse. It blinds them from the truth. The only competition in trading is the person you were yesterday. The traders who survive understand that mastery comes slowly. They learn at a natural pace. They don't rush. They don't force breakthroughs. They focus on balance, between studying and resting, between analyzing and living, between the market and their mental health. They understand that trading is something you refine over years, not weeks. They move with patience, not panic. They build with intention, not desperation. Trading rewards the steady. Trading punishes the rushed. Trading strengthens those who give themselves time. Beginners quit because they tried to master a lifetime craft with a short-term mindset. Professionals succeed because they treat trading like a skill they will carry for the rest of their life. When you stop sprinting, You finally start progressing. If you've reached this point, understand something important. The challenges you face in trading don't mean you're weak. They don't mean you're failing. They don't mean you're not meant for this. They mean you're human, and you're learning one of the hardest skills in the world. Every profitable trader you admire once stood exactly where you are now, confused, frustrated, doubting themselves, wondering whether to keep going or give up. But they made one choice that changed everything. They didn't quit. They pushed through the messy stage. They accepted the losses as lessons. They kept studying when the results weren't showing. They built discipline slowly, painfully, consistently. They trusted the process long enough to see the progress. And you can do the same. The fact that you're seeking clarity, guidance, and understanding already puts you ahead of most beginners. It means you're not just chasing money. You're building awareness. You're strengthening your mindset. You're learning the truths that many traders never face until it's too late. Maybe you've blown accounts. Maybe you've taken bad trades. Maybe you've doubted yourself 100 times. None of that disqualifies you. It qualifies you. It shows you're in the arena, fighting, learning, evolving. Trading isn't about never falling. It's about getting back up smarter every time you do. So if you feel lost, overwhelmed, or tired, remember this. The brutal stage is temporary. The confusion is temporary. The losing streaks are temporary. But the mastery you build by enduring them, that stays with you forever. You are not behind. You are not late. You are not failing. You are simply in the part of the journey that every real trader must pass through. Keep going. Study with patience. Risk small. Think long term. Trust the process even when the market doesn't reward you yet. Because the moment you decide not to quit, you already separate yourself from the majority. The market doesn't need perfect traders. It needs persistent ones, focused ones, disciplined ones, traders who grow slowly but steadily, quietly but consistently. And if you continue, you will become one of them. If this video helped you understand why beginners quit trading so easily, make sure to like this video so more traders can see it. Share it with someone who needs motivation today. And if you want more mindset, focused trading content, don't forget to subscribe. Your journey doesn't end here. Stay disciplined, stay growing, and stay with us.